The Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC readings. The format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have Delta Airlines Inc. Ticker is DAL. Price at the point of filing is $39. Let me say first, this is not a recommendation, not advice. Please do your own diligence before investing into anything, and let's get right into it. The perils of investing in the airline industry are well studied and well known. For investors with thicker blubber than the rest, we believe that Delta shares are underpriced. Delta is a company which enjoys a high reputation and appears to be one of the best players in one of the worst industries. Being the best of the worst sits somewhere between high quality and distress, and certainly in the zip code of value. The company is highly leveraged from the pandemic and thus requests the presence of investors comfortable with debt analysis. Delta held an Investors Day in February of 2022 and again most recently in December of 2022. CEO at Bastian must be aware of the headwinds in promoting his company, a high fixed cost business selling a semi discretionary product, especially at a time when the cognoscentes of the company, of the economic outlook, into their magic eight balls and whisper, late cycle. One would guess the prognostications of these magicians are on his mind as he stands on the podium and promises that $7 of earnings per share in 2024. Said more plainly, I would guess that his guidance is conservative. Presently, DAL trades at $39, or roughly 5.5 times Mr. Bastian's targeted earnings. In the meantime, following is a background on Delta. It is likely the best or second best airline business in the world and enjoys a very high reputation from consumers and investors. Delta has a more premium product than the other mainstream American carriers and consistently offers good service while running their planes, on time. The Wall Street Journal normally crowns DAL the best carrier in the United States. The business mix is skewed to the high end, and presently less than 5% of Delta's revenues are from restricted economy fares. These developments are very much of the last 10 years and can be credited to Mr. Bastian's operational prowess. Delta's goals for 2024 are as follows. Number 1, grow revenue to north of 60 billion from 50 billion in 2022. This represents a 5% CAGR from 2019, revenues of 47 billion. 2, operate the business with 13 to 15% margins, which appears reasonable as operating margins averaged 14.5% in the period 2015 to 2019. Third, in all, yield an EPS of $7 plus. And fourth, further, Delta hopes to generate $9 billion of cash from operations, $5 billion of capex, and thus $4 billion of free cash flow in 2024. Therefore, debt slash EBITDA is to be reduced from 5x presently to 2 to 3x. As written above, Delta offers a relatively premium and differentiated product than competition. Case in point, the mix of premium seats in 2009 was under 9%, and by 2019, the mix improved to 28%. Mr. Bastian's goal is to drive the mix north of 30% over the next 2 years. Thus, the contribution of premium cabin tickets, the American Express business, and other fees to revenues has grown from 40% in the early 2010 to 55 to 60% presently. This is in part due to better monetization of first class and premium economy and significant growth in the Amex business. Delta is competing much less with Spirit, Frontier, or JetBlue than is United or American. It is my guess that as the premium products accounts for most of revenues, that they are responsible for almost all of Delta's profits. A note about the Amex business. Delta plans to continue to expand their American Express partnership, which has grown by about 50% since 2017. The most high-end Amex Delta card bears an annual fee of $550. In 2022, Delta expanded the deal to 2029. The program allows for Amex to purchase miles from Delta as cardholders spend money, which are then redeemed for travel. The positive is twofold. It promises future business for Delta, and as the deferred revenue balance grows, provides a cash distribution of about 300 to 500 million each year. Delta hopes to grow the program another 30% by 2024. Some details on the balance sheet, which is obviously weak. The numbers are in billions and are of December 2022. Gross debt as of December 2019, 10.1. Debt issued since COVID began, 30.2. Debt paid back since COVID began, 17.3. Gross debt as of December 2022, 23.0. Lease liabilities and other, 7.6. Cash balance, negative 6.5. Net debt, 24.1. The maturities are not optimal, as about 7 billion of debt is coming due before the close of 2025. Finally, about 2.7 billion of the gross debt is floating. Overall, we think about the business as follows. It is a very well managed company which enjoys a good reputation and offers a relatively differentiated product. The business operates in a very poor industry. Assuming one is comfortable with the debt and determines that the company will continue to be of going concern, the good airlines may become stocks to own on a stormy day and sell when they see their day in the sun. Presently, the sentiment around airlines is fairly negative, and if we had to purchase an airline, Delta would be near the top of our list. Between 2014 and 2019, Delta has traded at an average of 10.4x on earnings per share. In 2016, 2017, 2018, and 2019, the average multiples were 9.7, 11.8, 8.9, and 7.7x, respectively. If we assume Ed Bastian is correct and that the company can generate $7 or more per share, we can value this at 9x earnings, which implies a $63 stock price or about 60 to 65% upside from today's prices. Catalyst. Delta is the strongest player in a recovering and poorly received industry. Thank you very much for tuning in, and see you next time.